And I would like to welcome to this session Dr. Ayman Ismail. Dr. Ayman Ismail is the Associate Professor of Business and Entrepreneurship, and he's the founding director of the AUC Venture Lab, the AUC Angels, and the AUC Innovation Hub. I would like also to welcome the speakers for today. Shin, he's the founding partner of Shorooq Partners. Seifallah Zoghbi, managing partner Zoser Capital. Alain and Hajj is the co-founder of the Paymob. I'd like to welcome you all to this session, and I hope it will be fruitful discussions to all of the attendees. And I will leave the floor now. I will just make a point that this session will be recorded, and recording will be shared with the relevant professors and the guest speakers after we are done. Also, if you have any questions, please type it on the chat boxes. Type your questions, and Dr. Ayman Ismail will be asking the question to the relevant speakers as he is moderating the session. Thank you all, and I wish you enjoy the session. Dr. Ayman, the mic is yours.
Thank you so much, Hala. Thank you for the Center for Entrepreneurship and Innovation and the Business Association for organizing this. Today we have three fantastic speakers with us as we start talking about fintech. So just as a bit of context, and we have a lot of students from the entrepreneurship course, the financial services industry has been there for a very long time, for decades and maybe even centuries. They do a lot of critical parts of the economy: payments, when people send payments, receive payments; savings, when you go and save money, whether in the bank or in any other alternative savings organization; lending, whether lending for individuals, for consumers, lending through credit cards, lending for businesses, small and medium enterprises, large enterprises, brokerage, and managing all the functions related to the stock market, and many other activities that are a big part of the nature of the financial services, and it's basically a huge enabler for the economy. So for the past, and I don't know if I should put a timeline, but for the past decade, we've seen a lot of transformation that's happening in the digital economy, enabled by a huge infrastructure connectivity. Everybody's now connected. People used to be connected through laptops. Now you're connected with mobiles. Now everybody is almost connected 24/7 with data and voice applications. And now we're seeing smartphones everywhere, and we're seeing a lot of connectivity infrastructure on top of that. A lot of what's happening in the financial services industry now is being disrupted, and that's what we're looking at today. So that part of that disruption is changing the way people pay money, the way businesses receive money, the way people and businesses lend and borrow money, the way they do their transactions, the way individuals are saving money, looking at credit, getting information, buying or sharing stocks, investing. All of these things are being transformed. So that's basically the essence of what's happening. And fintech is a combination of the financial services industry and all the emerging technologies. And we're seeing a lot of disruptions right now. So what we have with us today is Alain, who's a co-founder of one of the most interesting startups in Egypt, coming out of AUC specifically. And he'll talk to us a bit about the journey of Paymob, and also get us a little bit grounded on what's happening in that space. And then Shin, who will talk to us about the venture capital industry, and venture capital funds invest in early stage startups or in growth stage startups. And he's been in that space for quite some time, and he'll tell us a little bit about what's happening. And Saif has been part of the private industry, private equity industry for also a couple of decades, and has got a lot of experience in the region, and will tell us more about how larger investors look at that sector, whether as potential investors or also as users, consumers of financial services, from their perspective and from the perspective of the companies that they invest in. So we'll go through a round of discussion around that. And then if you have any comments, questions, thoughts, you can throw it in the chat box, and I'll bring it in the middle of the conversation. We can start with that at any point in time, so we can make this more of a dynamic and kind of a interactive discussion. So let me start with Alain. Alain is a graduate of AUC, and about 5 or 6 years ago. Him, along with Islam Shawi and Mustafa Manisi, they started Paymob, which is one of the most interesting companies, as I mentioned. He's got a lot of experience as the chief operating officer in the fintech space, and also a lot of knowledge in the financial technology space, mobile payments, payments gateways, and so on. So Alain, let me start with the beginning. Before we jump into the payment space, actually, tell us the story of Paymob just in a couple of minutes so that people would know about it. And then I want to ask you about what exactly is happening in the payment space in Egypt and why is that important?
I'm not seeing Alain. I'm not sure if he had an issue with connection.
Okay. Okay, so we missed them. That's fine. So let's jump to Shane, and maybe Ghada can call Alain and make sure that he's on if he has any problems with that. So Shane, Shane is let me kind of introduce you with a little bit more depth. Shane grew up in South Korea. He was born and grew up there, and then he moved to the US and Canada, and he worked a lot there. And now he's working in the UAE, but he's actually talking to us from South Korea. And oh, Alain is back. But actually, let's get Alain on board, and then I'll continue with the introduction with Shane. Alain, I don't know if you heard my question or not when you disconnected, or should I start from the beginning?
Yeah, can you hear me now?
Yes, perfect.
Sorry for that connectivity issue. I'm afraid I lost you, doctor. I didn't hear the question. I appreciate.
No worries. So I was just introducing you, and I was just asking you. Let's start with Alain. If you can tell us a little bit about the story of Paymob, and then we'll jump to the payment space and how does it work and why is it important? What's the value out of it?
Yes. Yes. So first of all, it's a great honor to be here. It's good to be contributing back to AUC one or another. I mean, we're myself and my fellow partners and co-founders, we all graduated from AUC. So it feels great to be contributing again and being part of this community even after we graduated years post that. So that feels great in itself. But simply put, our story goes back during the AUC days, surprising enough. So during our undergrad years, I got together with my fellow co-founders during a class of entrepreneurship, actually, and all of a sudden we found ourselves doing what we're doing, and how we simply back in the days we were just getting exposed to publications and getting exposed to what's happening back in the valley, what's happening out there in the world, and we couldn't see there's much going around here in Egypt. We only hear about big corporates. We only hear about companies opening up their offices here in Egypt, but we don't hear much about companies trying to build their very own path and build their very own businesses from scratch here from Egypt. So simply, we felt like there's something that needs to be done there. And back then, the opportunity that we found was simply we wanted to work on a social commerce platform. It still sounds like a very interesting idea, but we had to park it. So we had to park it because simply as we were building our business model, as a social commerce business, at the end of the day, logistics is an integral part of your operations. So when we actually built this kind of model and we tried to work on it, we discovered that there is a huge problem with payments. And that came by the fact that we discovered there's something called cash on delivery. I mean, back in the days, we were living in our very, very own bubble at university, and we thought hey, okay, so everyone's going to pay for us using their credit cards. But it turned out that, okay, that's not entirely true, because the Amazon-like experience is not really what's happening in countries in emerging countries like ours. So it was the first realization that we need to look outside of our the walls that we hang out at, or the walls that we sit in. But simply put, once we realized that, I think the good part is that we've managed to understand that we just had to pivot. We had to figure out something else to do. And that something was simply came from the realization that it seems that cash on delivery is a big problem, and if we are facing problems with it, we're pretty sure a lot of other businesses are facing the same, and it turns out to be true. So when we talk to a lot of other businesses in the e-commerce space, back when e-commerce was still, I mean, back then we thought it was big, but now when we look back in time, it feels like it was pretty much nothing to where it is today. And I'm pretty sure like in a year's time also we'll feel like, oh wow, look at what we thought was big enough. It turns out not to be quite a thing to what we're going to see. But simply, when we talk to these people, they all agreed that cash is a problem. Why? Because if you're a business working in the digital economy space or in the e-commerce space, you simply want your cash cycle to be as quickly as possible. Because at the end of the day, if you look at how these business models operate, they simply you sell products online, and then you have to buy the products, and then you distribute them, and then it takes the whole cycle like 3 to 4 weeks time until you as a business you get to collect your money in cash in your bank account. So simply put, you just have to operate in that space. You must be cash rich, or you would run out of business in no time. So considering that cash is already in itself an integral part or a limiting factor to the digital economy, and that is caused by the limitation in the infrastructure that exists in a country when it comes to digital payments. So when we talk fintech, at the end of the day, and the heart and core of fintech, as what we call it, is payments, because everything else is built on it. It's like the pipes or it's like the water pipes that all buildings get to build their sewage systems from, and so on. So at the end of the day, when we look at payments, it's an integral part behind every single other line of business in the financial services space needs, whether it's lending, savings, insurance, even KYC requirements. So everything is one way or another integrated to that space. Payments at the end of the day, we believe it is quite critical, because if you look at more of a macro standpoint, economies grow when money moves fast, and that's what financial services bring to the table. And with digital payments in particular, the money moves almost instantly, so that makes it quite interesting and quite rewarding when it comes to the macro level. But at the end of the day, there is no use when we talk about fintech from macro level without really understanding the actual needs and what problem or what solutions this cater for. And this is what at Paymob we have highlighted. So coming from being a business in the first place, we understood that we had to collect our money fast. So what we built is that we have managed to, as a company, we managed to aggregate all sorts of payment options for businesses. And that came from the premise that when we were building our business in the first place, we understood that there are so many different options out there, and it's so expensive, and there's so much hassle that comes along with it to be able to integrate and add each and every payment method to our online store and so on. So considering this this problem existing, it was exactly the problem we're trying to fix for. And this is what we've managed to do. But also, if we take a step back, with payments, when you mention payments, there's always two sides of the equation. I mean, there is no payment that goes from a destination to nowhere, or that comes from a nowhere to a certain destination. At the end of the day, there is a source and a destination to each and every payment, and that's something when people working in the digital payments landscape, they have to look for, because at the end of the day, there is no point of giving merchants tools to collect their money digitally without having the consumers some sort of a form or tools to pay their money in the digital form in the first place. So on the other side, this is first of all how we serve merchants, and how we serve consumers on the other hand is that we managed to be partnering up with the largest and the biggest financial institutions in the country, whether they're banks, telecom operators, even card scheme and national switch. We've managed to partner up with them to cater for the largest ecosystem play when it comes to digital wallets. What we do is that we build the underlying infrastructure for digital wallet infrastructures for banks and telecom operators in partnership with schemes and national switch of the country to cater for the mobile wallets as we know them today. And they come on board. I mean, no one would really know what Paymob is on the consumer side, but if you use the absolute majority of the banks and the telecom operators here in Egypt, they're using our platforms for it. So there is a much higher likely chance that you may have encountered or used our services without really knowing who we are. But again, the one thing we always like to mention about our journey is that it started really, really small, and it started during the uni days. It started from places where we never even at that point in time thought that it could get to where it is today. But at the end of the day, it's just being very dedicated and being very like having the right people in place and partnering up with the right partners first of all, and making sure that the kind of team members that you work with, which I'm pretty sure everyone here at some point or another will consider like having their very own business at one point. It's always the one thing that we tell people is like make sure that you choose the right partners for it. So this is what the journey is about, and this is the kind of focus of how we ended up doing fintech, and why at the end of the day we feel like it's an integral part of an economy and it paves the way for a digital transformation in emerging markets at large.
Thank you, Alain. That's a very interesting story, and I think it's good to set up at least the scene for the payment side. So let me jump to Shane. First, just introducing Shane. Shane is a veteran venture capitalist professional. He now is a founding partner at Shorooq Partners, which he co-leads. It's a seed stage venture capital fund that focuses on the Middle East, North Africa, and Turkey. Prior to that, Shane had a long career as an investment professional, mostly in the US. He worked in UBS, TD Security, Lazard, Alpine Investors, Global Foundries, to name a few. He's a graduate of Wharton School at the University of Pennsylvania. Shane was born and grew up in South Korea, lived in the US and Canada, and now he's residing in the UAE, but talking to us from South Korea. Where he did not probably notice the time difference, but probably it's very late at where Shane is right now. So Shane, let me ask you, from a venture capital perspective, and maybe if you can also tell us a little bit about the venture capital industry, how does it work, and introduce Shorooq Partners and the fund, but why do you look actually at fintech? So tell us about Shorooq Capital, and then tell us why do you look at fintech? What does it mean for you?
Sure. First of all, team, really excited to be here and also honored to present and get to know you, which is really the brain power of Egypt and also the whole region. So I'm really blessed and honored to be here. So starting with Shorooq, so we're leading early stage tech-focused VC. So early stage, meaning that we focus on the seed up to Series A. So a lot of our investments, the first checks were pre-revenue. So we don't mind coming in super early when you have an idea. Sometimes we would actually help you co-found the company, help you find other co-founders. So we like to be very active when we invest and also help you build up to Series A and actually even after that. Right? We focus on fintech, platform and software as our sweet spot, but fintech has been our core really since 2015 and 16. And we do have a strong regional focus really coming from UAE, Saudi, and Egypt as our core geography. And we have now a bit more than 25 companies in our portfolio, and we have made more than 50 investments across all those 25. So we do a lot of follow-ons. And if you have any specific questions on those specific terms, I'd love to tell you more, but this is what we do at Shorooq. Now, to tell you slightly about the VC, because I know our friend Saif is going to talk more about the PE. Like really simply put, VC is the stage of an investment asset class that we like to invest when the companies are really early on. It can be like just the founders. It can be at the super groups to a stage when the company just literally launched the MVP or they're just actually just start to generate revenue. And we like to really back the founders and then be part of their growth journey so that when they become mature, and they're actually looking for liquidation or exits, the PE guys can come in, actually either buy the majority or significant minority and change the management, etc. There are many key differentiation to be specific, for example, the use of capital. When VCs invest into the companies, we have a specific use of capital, which is normally to grow the company versus to use to buy someone else's ownership, which tends to be a lot of private equities capital's objective. Right, so that's super high level on a PE and a VC. But like, I would love to tell you more if you have any specific questions. So do let us know.
Right. What about the fintech? Why are you investing in fintech?
Yes. So the way we look at the regional landscape, friends, is that let me give an example. Right, in the U.S., the e-commerce online boom really happened in the early 2000s. So 2001 to 2005, really even 2008 out until the mortgage crisis, the financial crisis, and after that, we start to see so much more on the software, fintech. Now we see a lot on the AI, blockchain, machine learning, etc. The way we look at the regional landscape was the fintech, the e-commerce boom was happening in 2011 to 2015 and still going forward, but that's really the birth of e-commerce. And when you start to see the birth of e-commerce, all the derivative sectors start to be disrupted. Payments, like a COD issue that Alain mentioned, last mile delivery, all this logistics, mobility, so all of these derivatives start to flourish. And we saw that the fintech in 2015 and 16, this is where we started to invest in fintech in the region, was started to be really integral part of the ecosystem. And also the key part here is the regulation started to change. So the beauty, the blessing and a curse of a fintech is that you really need to understand the regulation quite well versus a lot of other sectors that we invest in. And we felt that there is a lot of momentum, not only from the grounds up, like the e-commerce fintech, but also from the top down, the regulation change. So that's what we love fintech. As Alain mentioned, it is such an integral part of our day-to-day life. We cannot build our economy without the seamless fintech solutions. And we have been on the front runners of that. We will continue to back the best founders in this space.
And Shin, can you elaborate a little bit about the regulations point? Because I think if you want to open a small business, usually, I mean, regulation is part of it, but you don't think much about it. You go get a license, open the store. But when you get into fintech, this is really the key determinant for what you can get or not get into. So tell us a little bit about what's happening in that space. Why is it important?
Yeah, so let me start with a disclaimer. So fintech is a big word, right? It's a general word, and some fintech companies you can actually just work as a platform or software, so you might not need so much regulations or support. But if you are touching the mobile wallet, anything that touches on a man on the street, on the investment side, on the lending side, then you really need to be on the you really need to cope with the regulation and be, let's say, be super bulletproof because of the AML and all those CTF, all those functions. So now to give you specifics, right? When we were first investing in 2016, frankly, there was not much regulation on every country. UAE, Saudi, Egypt, there were still forming those concepts. And I remember those days when we were part of the discussions with the regulators. We submit white papers and we get the regulations on each. It's the landscape. For example, it can be lending. Then we form a group and we focus on the regulation. It can be now on the mobile wallet. It can be on the blockchain type of space. So the beauty, because the fintech really has the implications on day-to-day lives, particularly for also just general public, it has to be heavily regulated, and we need to understand how the regulation will change before we invest in a business.
This is very helpful. I think it's always interesting to keep that in mind when we're getting into that space, because the regulatory framework is what opens the door for new innovations and new companies to get into that space. And that's a big part that's happening in Egypt right now. For the past, actually this last summer, we've seen a new law for the banking sector, for the central bank and the banking sector, with a whole new chapter that is regulating the digital payments. We're seeing a new law that is coming soon for the Financial Regulatory Authority that's regulating other non-banking financial services like lending, consumer lending, and things like that. We also had a new law about a month ago for privacy and data protection, similar to the GDPR law in Europe, and it's actually very important for the financial services. And we're seeing a lot of regulations coming from the central bank about opening things, easing up things, and we're also seeing regulations on the digital identity verification, know your client, KYC, electronic KYC, and at some point I'll ask Alain to demystify what that means. So we're seeing actually a lot of regulatory changes that are happening in Egypt for the past 4 months. So this is not, I mean, the central bank and the government has been working on it for a couple of years, but they just came. And this is why we're seeing actually, I think at Egypt, we are in a point where this space is transforming. And for the next couple of years, we're going to see a lot of growth and a lot of startups and a lot of money, also investments getting into it. Let me jump into Saif. And Saif, first, an introduction for a very impressive career. Saif has 2 decades of experience in private equity and financial advisory. He is the founding partner of Zoser Capital Partners, a mid-market private equity firm established to support investments in that space. Prior to that, Saif has worked in many spaces in human capital, investing in healthcare sector, in Abraj group where he was a principal. He was a managing director in CI Capital Partners, and many other interesting jobs in that space. Saif is a graduate of business economics and undergrad and master's in international management from Oxford Brookes University. And I assume, Saif, you're based in Egypt or Dubai? I don't want to make.
I was originally based in Dubai.
Okay.
I was originally based in Dubai, but I moved back to Egypt in 2010.
Okay, so that's fantastic. So Saif is now based in Egypt. Saif, let me start with actually just getting you to introduce a little bit what's the private equity industry. Tell us a little bit about it. What's your experience in that space? And then I'm going to ask you about what does fintech mean for you in that space and why would you be interested? But Shane talked about venture capital, which is an investment class, but what is private equity and how does it work?
Well, private equity is the last stage of investing in a business's life cycle. So, as Shane mentioned, you have VC and seed funders, which basically, and accelerate the growth in businesses as they're growing, pre-revenue, pre-profit, and until after that, with a high, focus on growing revenues and growing their customer base. Private equity comes at the later stage of investing in private businesses. So ideally what we would do is that we take a business that is profitable, we will invest capital into that business to expand, and ideally exit through an initial public offering on a stock exchange, whether it's a local exchange or an international exchange. And the way that we do that is that we collect money from high net worth individuals, international institutional investors, and DFIs into a fund model. And we use that fund to invest into companies, and it could be a majority stake, it could be a minority stake. It will depend on, the mandate of that specific fund. So in terms of, and I think this is what really differentiates us between, venture capital is that our risk return appetite is quite different in the sense that I will be willing to accept a lower return in a safer investment, where VC can be more aggressive in the kind of investments that they make. So for example, a VC fund can make 20 investments in any one fund. Out of the 20 investments, maybe 10 will fail, another 5 will do okay, 3 will make a decent return, then you have 1 or 2 unicorns that will return the fund many times over. With private equity, we have much less appetite for businesses that fail. And that goes hand in hand with the kind of investors that invest with us. So generally we'd be very happy with a 3 times return on investment on a period of 5 years, and that's kind of industry standard. So that's really how we differentiate ourselves from the early stage investors. In terms of fintech and what attracts us to fintech. Obviously, it's a high growth industry. As Alain mentioned, it touches every single part of the economy, right? So whether you are a pipes manufacturer, whether you're a food business, whether you are a hospital, all of these businesses, you can kind of integrate fintech into their operations. So investing in a kind of business that can touch the entire economy diversifies your risk in terms of a specific segment of the economy lagging in terms of its growth. So that's I think the main attraction from our perspective. And look, investing in fintech isn't something new for private equity. I remember when I was at Abraj, we made an investment in Network International, which was a business that manages credit card processing. So it was very focused on the network, aspect of, the fintech business. And, I think what has changed over the years, this was an investment made in 2010. If you look at the last investment that, that we've seen here in Egypt in fintech, you look at Fawdi, which was done in 2015, they focused on the unbanked sector of the economy, right? So if you look at Egypt, 85% of people in Egypt, thereabouts, don't even have credit card, they don't have a bank account, right? So you basically went from targeting, with Network International, a business that, someone needed to have a bank or needed to have a credit card to be able to access it, to now where basically you can target the entire population because you're basically focused on cash. And the key aspect of that is scalability, right? And I think that's why you've seen such growth and an interest in tech investing over the last decade, is because what's at the core of their business model is how quickly can I scale, and the amount of capital that I need to scale isn't as much as brick and mortar type businesses. So if you have a hospital, for you to build another hospital, it's a significant investment, right? But if you're a payment processor, jumping from 100 customers to 1 million customers won't require the same kind of capital that you would on a brick and mortar business.
And if you can tell us a little bit more about Fawdi's story, because I think everybody's curious to hear about that, Saif, and you have some good knowledge of it. So why is Fawdi now a company that's worth 20 billion pounds, $1.2 billion, when the company is almost a decade old, and it's practically speaking bigger than many companies in actually many of the big companies in Egypt? Why is that happening? What's the value in Fawdi?
It's basically, again, going back to what I mentioned before, scalability, their ability to grow. So their acquisition costs of getting an additional customer is significantly lower than a business that's focused on, needing to have a large infrastructure and to invest in infrastructure. So their growth profile is significantly higher inherently, given the high tech nature of their business. And I think that's what people are investing in, right? So if you look at all, the tech giants, right? They spent years and years not making money, right? And people invested in them because at one point they were going to have enough scale that they can monetize on their business model. And the thing with Fawdi is, it spent a lot of time building that scale. And I think it's more about acceptance by the market that this product will work in Egypt. And I think, in 2010, there wasn't the belief that we could become, such a strong and attractive tech market. And I think that has changed.
Let me actually follow up on the question on the regulation, and say if you've been in Egypt for a while and you're seeing the changes in the regulation. And Dr. Tariq Hatem was asking about what are the major regulations that we should be aware of, and what's the change in the regulatory space that you're seeing right now, and what new opportunities does it open for entrepreneurs?
Well, look, it's a double-edged sword with regulation, right? Because at the end of the day, the central bank is responsible for the average person on the street, and ensuring that their best interests are at heart, and that people cannot take advantage of that. And obviously, having that on one side, and then on the other side, them wanting to move away from a cash-based society, which is obviously expensive. Printing money is expensive, dealing with coins is expensive. It's very difficult for small businesses and manufacturers to move around with the kind of price denominations that we have and inflation that we're dealing with. And I'm sure the amount of times that you've gone to a supermarket and your bill is 15.27 pounds, right? There's no way to solve that remainder, right? And it either had someone takes it takes the extra change, or you basically give up the extra change. So they want to move away from a society that relies on cash. But they have to be very wary of how that grows in. I think the biggest challenge that you're seeing is with mobile phone operators, right? And you can see that with Vodafone Cash and so on and so forth. That telecoms are trying to solve for that problem through their networks. And obviously, central bank is going to be very reluctant to do that, because obviously it would put a lot of power in the telecom's hands, which they basically cannot control. So I think that, they are taking steps in the right direction. And I think, this is the most important factor, is that the willingness and to change is there, but it will take time. It's not something that can happen overnight, and there will be efforts to move it forward, but it will take its own pace.
I think that's very interesting to see actually that regulatory change and the change in the industry going based on that. Alain, let me jump in and ask you actually, for building on Saif's point. Now we're seeing a lot of the small businesses actually starting to accept digital payments, accept credit cards, and so on. And you have a solution and offering in the acceptance space. So if you can tell us a little bit, what does acceptance mean? And how does it work with small and medium businesses? And how is that transforming actually the economy the way you're seeing?
Yes. Okay. So I was muted. Sorry. Well, I couldn't agree more with what Saif is saying, especially in particular in regards to the regulations. Leading to the part when it comes to acceptance, at the end of the day, we as consumers, which is definitely we're all consumers, but not all of us are business owners. So we're all consumers, and we get to see our part of the story, but we don't get to see what it takes on the other side of the story to really make the machine work at the end of the day. So when it comes to payments, acceptance is an integral part, and it is the term we refer to when it comes to receiving money. Acceptance is all about receiving digital money for merchants, and simply how this is done. At the end of the day, it's done how it's done is very functional. It's very functional in terms of what methods are the consumer using. Since back in time, I mean, it has been like 30 to 40 years now, maybe even more. Banks and financial institutions have been printing out cards to the whole public and to the whole masses. I mean, over the past years, we've been doing so. I mean, not we. I'm young for that, but the industry has been doing so, and they've managed to up until now print out close to 20 million cards in that sense. So technically, when you look at cards it's a piece of plastic. It's an expensive medium of exchange, as we call it. Card is the medium of exchange in that sense, because at the end of the day, it's where the money is stored, or how you refer to where the money is stored, pretty much. The thing about cards is that it needs an acceptance tool, and this acceptance tool, if it's for online, then it's what we call the payment gateway, and this is where the payment gateway is pretty much like the interface where you put your credit card information on. But when you go to the brick and mortar store, it's what we call the POS machine. So the point of sale terminal, or the card reader that is inside the store, it's what is required for the merchant to be able to accept this digital tool of payment. The thing about that is that it is definitely scalable, and it has been like the convention for over the past decades. Even before that, I mean, I'm not sure if anyone remembers that or could see how this works. But back in the days, they used to put the card and hello.
You're back, Alan. You just froze for a few seconds. You're back.
I'm back. Okay, sorry. So yeah, speaking of the POS terminals is what is needed for the card acceptance to take place, because it's at the end of the day, it's the medium of which the merchants have to use to read the card information and be able to perform the transaction. But as we move forward from that, I mean, in terms of scalability, the problem with POS terminals is that at the end of the day, it caters for a subset of the type of merchants that it can really accommodate for. Because at the end of the day, when you talk about POS terminal, it has a cost, and its cost is not that cheap. It could be equivalent to the cost of a smartphone or something, and that for the smaller kind of retailers and the smaller kind of merchants, it might not be the most convenient or the most economic way to conduct this kind of business. Accordingly, fintech solutions and fintech innovations, they cater for, or part of the role is to actually cater for alternative tools that makes it much cheaper and hence much more accessible to a bigger chunk of the population, whether they are merchants or even consumers. Thank you, sir, for mentioning Vodafone Cash, because Vodafone Cash, at the end of the day, it's one of the, if not the largest mobile wallet deployment in the MENA region, and that accordingly it sheds the light on the difference between what a telecom operator can do and what a bank can do. At the end of the day, as you mentioned, Saif, like the cost of onboarding a client or the cost of growing or the cost of managing a client for a bank is much more expensive in comparison to a telecom operator. And that by the nature of the distribution and by the nature of the average return of a customer for a telecom in comparison to a bank, and what it takes to actually operate a bank versus what it takes to operate a telecom operator. And hence, services like Vodafone Cash and depending more on telecom operators have managed to like onboard a much bigger number of consumers on digital financial services in comparison to banks. Why? First of all, distribution. Second of all, cost of operation and cost of growth is much cheaper, and hence they are able to cater for a wider spectrum of consumers. But when we mention that, what is this solving for again? And this is what we always ask. It's like, why should I use my wallet, or what should I use my phone in comparison to a card or to a plastic card? The thing about it is that at the end of the day, it reaches to underserved segments. Whenever we talk about financial services, we always mention unbanked and unbanked. We at Paymob actually like to use the word underserved and underserved, because at the end of the day, we look at the figures and you see that potentially somewhere around 20 million cards are printed, but they're pretty much, if you look at the activities and how many of these cards are actually being used, it's quite remarkably low. And hence, there is a much bigger underserved market in comparison to the unbanked market in that sense. And accordingly, mobile wallets is what is here to cater for. Mobile wallets makes access to digital payments much cheaper and much more accessible, and it even brings direct services to your hand, which makes you much more of a consumer to the digital financial services without even have to get out of your home, get out of your place. Accordingly, having the mobile wallet in place. Sure.
No, and I was just going to ask you if you can tell us a little bit about the mobile wallets in Egypt, because I think most people expect that it's a lot smaller than what it is. So how big is it? How widely spread is it? Who's using it? What are they doing with it? So maybe a couple of minutes on that would be very helpful in explaining the market for our audience.
Definitely. It makes a lot of sense. I mean, I know that whenever I mention mobile wallets for my friends and family, they always think of Apple Pay. However, the mobile wallets here are not even close to what Apple Pay is about. So simply, at the end of the day, mobile wallets it's how it got mainstream. We always look at the example coming from Kenya. And Kenya is where mobile wallets actually made it mainstream really early on back in the days. I think it started going mainstream back in 2007, which is probably even before like smartphones became mainstream in the first place. So why did this came into hand and how does it work? At the end of the day, a mobile wallet is a stored value account. A stored value account, it means simply a place where you can hold a balance and then use it to purchase goods or to send money or receive money or exchange of anything, pretty much. So this kind of stored value account, or what we call the SVA, is interfaced by a phone number. Okay, so whenever any of us, when they have a bank account, you have a bank account number. Mobile wallets, your bank account number is technically your phone number. So it is pretty much a mirrored interface for what a bank account is about. And whenever I like try to explain it in simpler terms, it's like a very simplified or a smaller version of what a bank account is about. But at the end of the day, this bank account or this SVA, this stored value account, you can really access it from your phone. And when we think about mobile wallets, we always feel like it's going to be smartphone dependent. However, the real nature of it is that actually, and particularly in Egypt here, more than 95% of the traffic is actually coming from what we call USSD and SMS-like interaction. And surprising enough, when we see also like mobile wallets, when we understand and we look at the penetration of smartphones in the economy, it's quite interesting to know that most of the traffic is still coming from the same ways that people used to top up their credit and use the scratch cards to recharge their phone credit and so on. In terms of numbers, Doctor, so simply, I know that most of us might or might not actually have a mobile wallet, or maybe they have it, but they don't know that they have it. But the numbers are actually very close to what the number of card penetration in the country, surprising enough. And I think the last figures I've got is like pretty close to like 16 million. And for us, of which like 12 million of these are ones we operate at Paymob here. But these 16 million mobile wallets are getting distributed or getting like catered for using mostly mobile network operator than banks because of the reach and the distribution and the easier access to these merchants. The beauty about mobile wallets also is that not just it brings certain direct services from your phone through your phone, it actually lowers the cost of acceptance. And that brings me back to the point when it comes to acceptance and businesses. At the end of the day, you have all sizes of businesses, and for the economics of a POS terminal to make sense for a small kiosk at the end of your street, it just can't happen, to be honest. And at the end of the day, why? Because the cost of hardware is just very expensive in consideration to the traffic that's gonna happen on the POS terminal, and accordingly, the business case doesn't make sense to subsidize for it, or people like us actually to venture in and build some sort of a more economic model around it. So simply put, depending on mobile wallet helps this micro or nano kind of using a QR code or using a six-digit number, for instance, that you enter on your phone and perform the payments for this exchange of goods or service. So at the end of the day, mobile wallet it is big already, even though maybe a lot of people don't know about its existence, but it is quite mainstream in certain sectors and certain segments of the society here. And we ourselves have seen the kind of impact it brings, whether to merchants and to the smallest and the nano and the micro kind of merchants, as the kind of value it brings to them. And at the end of the day, we are already experiencing and we're seeing the tremendous growth it's coming from it. And of course, COVID-19 has a big impact on that, and it's one of the very few businesses that we're quite fortunate to be part of, because COVID-19 had quite a tremendous positive impact on the digital economy, and we are already seeing like tremendous shift in behavior from cash to non-cash, and non-cash includes a lot of different options, but non-cash is what's really growing the effort of card distribution, mobile wallet, digital payment acceptance, aggregation of all forms of options, consumer finance services, which are every day like opening up and starting in the Egyptian market and actually in the region, the whole region. And of course, relaxation of regulation, new regulations are being issued. And honestly speaking of that as well, I've never seen the regulator having this kind of appetite ever before.
Yeah.
I mean, it's quite tremendous. We've been in this for 5 years. Yeah, sure. So we've been in this industry for 5 years. Yeah, and we've seen the change in narrative. I mean, we went in there with the ponytail and the afro hair, and they couldn't take us seriously. Now they're actually like all ears, and they are giving us like tremendous attention when it comes to what kind of regulation we need to be putting in place. So the narrative is not just someone is putting the rules and hey guys, you just have to abide by it. It's actually it's a conversation. They're listening, they're hearing, and they're adjusting, and they're moving really quick to accommodate for the necessary regulatory moves to cater for financial inclusion as it should be.
I think, Alain, you're spot on in that the sense of change, actually, especially on the regulatory side in Egypt for the past 2 years has been amazing, and we're starting to see a huge switch and shift to the part that you mentioned about cashless. And there were several questions from Saif and from actually I'll get to Saif's question at some point in time, and from Dr. Tariq Hatem and from Ghada Hafiz. Let me jump to the cashless part and ask you about that. How far are you seeing the change and the progress into that cashless side? And are you invested in any startups that are supporting that, whether on the payment side, merchant side? How are you seeing that space?
Yes. Even before I talk about the specific cashless or the payment side, network side, because we have quite a few companies on that. I do want to take a quick step back and explain what fintech really is, because I think it's such a vague, general word. I don't know if everyone is aligned on how we should be looking at it. So at least the way Shorooq, my consideration for the friends here is, if you look at what a bank provides, right? The banks, if you actually think about it, they do a lot of things. For example, even before you become a client, the KYC AML, which is the whole big industry, saving money for you, which is the storage. That's what the mobile wallet tends to play. There's an investing function, which means there's hundreds of companies who facilitate investing in a variety of forms. There's a remittance, there's a payment network, there's a lending, there's escrow account. So each one of this that a bank provides over the last hundreds of years is being disrupted. And this is whole called a fintech, right? And now to come back to your question, Doctor, essentially, we believe right now is the ripe, perfect time to invest in so-called infrastructure fintech companies that actually touch some of this core of regulation. It's not a mobile wallet, for example, that really has a sexy app, a great UI, UX, that really focus a lot on the customer acquisition, which is a big industry itself. And that has been extremely popular globally. And we do look at many companies there. But some is a sector that Shorooq, we still do not have made investments yet for our own thesis. But what we are more excited is that the stuff that touches the payment network, right? We invested and we led the pre-Series A and also leading Series A of a company called NimCard, which is so-called Marquita of the US. So they're on the issuers processor side. They enable any companies, including fintech to banks to any companies to issue virtual cards. So we love that company. We also invested in a company called Lean, which is the open banking infrastructure. So in Europe, if you go to spend time in Europe, they're extremely advanced in a concept called open banking, which in our region is still not there yet, but we're getting there. And the company like Lean, Taraba Gateway from Bahrain, and also Dapi from UAE, we enable those transformations. So we love those a little bit more on the deep tech side these days, because we have been investing in those front end, like a B2C investing options like Sarwa, Smart Crowd since 2017. So this is how we look at the cashless, the transformation, that's how it's being disrupted.
And you have not made any investments, Shane, in Egypt yet, right?
So we actually have two already. We're closing the third one. So we invested in Kasna, which is part of which is part of a fintech. We also invested in Breadfast. Right, Breadfast. They started with let's say a simple online grocery of bread, but they do a lot more than bread now. So we love both companies. We also invest in a third company. We just didn't announce it yet, which I believe the announcement will come very soon in the next few days. And I'm sure the whole ecosystem will embrace our third investment in Egypt.
That would be fantastic. Can you tell us, I use Breadfast a lot, but can you tell us a little bit about Kasna? So what do they do and why were you interested in investing in them?
So starting with just the rock star founder, we really are a big fan and a big support of Omar. So Omar and my co-founder partner Mahmoud, they all went to Stanford, so we have known him as a friend for a while. And when he launched Kasna, we wanted to be one of the first backers to really just enable him to fulfill his vision. So Kasna consider their salary like an employee salary advancement program. So this is how they started, especially focused on the blue collar workers. So they are B2B2C. So you sign with the B2B, let's say corporates, who employ thousands and tens of thousands of employees who sometimes need a salary advancement. So this is essentially, you can consider as a fintech lending platform, just through a different business model. And we have a big thesis in lending in general. We have looked at every company in the region, from like Liwa to Beehive to, there's a C2B lending, C2C lending, B2B lending. We love that space, and we're continuing to invest a bit more in that space.
By the way, Fatma, who's one of the co-founders, is an AUC alumni and who actually took this very course with me about 5 years ago, and she's fantastic. So
Great.
let me actually ask you about the lending part. Alain talked a lot about the payment part. I think the lending is one that is being opened up right now substantially with the new regulations by the central bank. So tell us a little bit what's happening in the lending space. Why is lending important? You mentioned fintech is basically literally disaggregating the bank and getting all the services of the bank done through smaller but faster, more agile and tech-driven startups. And lending is the core of that. But usually we complain that access to finance, access to loans is limited, both for individuals and for companies. And we're seeing that space now opening up. Companies like Khazna, Pay Now, yesterday they got a $2.1 million investments, and many companies are getting into that space, including from other countries like Kashet, coming from Pakistan to Egypt, launching last year. So tell us what your thoughts on that space, Shane.
So I think it's a great point, and because I'm such a, I grew up in Korea, worked and lived in the US for so long. And then when I came to the Middle East, some of the challenges I saw is that our banks, banks by nature are conservative, but our banks in the region are extra conservative. So for example, like I'm sure Saif will agree, for any companies to grow and actually have an auxiliary path, they need access to a low cost of capital. And frankly, banks are the perfect ones to provide the low cost of capital. But a lot of banks here, they actually ask you, are you profitable for 3 years? No company, no startup is profitable for 3 years before they get into the bank financing. Like all the SMEs, they actually have a severely limited access to capital because in my humble view, we still need a lot of time for banks to take a bit more risk and actually provide that functions. And because there's a massive gap in that function, so much lending companies, as soon as the regulation is allows you to come up with it, you are going to see so much. But again, the problem of those fintech lending companies, one of the key critical due diligence points we need to do is how can they have access to low cost capital? Because essentially, if they don't have a low cost of a capital, their lending terms are going to be also super high, which is never really like that sustainable. And they also essentially need their own supply of capital, right? So this is the biggest drawback, but I'm confident that the industry and the ecosystem is maturing fast to enable, let's say, easier lending, which is good for every single part of us.
And I think this is a very important time. In Egypt, we used to have interest rates in the 16, 17, 18%. Now they're down to single digit with inflation going down. So it's actually opening the space for that lending. Saif, let me get your thoughts about these things. We talked a lot about cashless, about the lending, about that space. So before I ask you specific things to the private equity industry, would love to hear your thoughts on that. You've been in the financial services and you've seen the traditional banking, brokerage, investment bankers, banking firms operating. And now you're seeing a lot of the fintech companies coming globally. And I think we're getting in there in Egypt as well. Any thoughts on that?
Well, look, I think, I agree with a lot of stuff that, Shane was saying. Look, I think in terms of the kind of risk we're asking banks to give in terms of startups, in terms of early stage businesses, goes back to a very core problem but a core nature of the banking sector here in Egypt. Bankruptcy laws are terrible. If you are taking a loan, you are personally responsible for that loan, and it really discourages entrepreneurs taking risks because they know they will lose their homes, they will potentially go to jail in the event that their ventures do not succeed. So I think that's probably at the core of the problem, and this stems out of the fact that the central bank in Egypt is very wary about protecting the account holders in Egypt, right? In the sense that any financing that you're going to give to a startup, to a fintech business, is going to come out of someone's deposit, and this is your average Joe on the street. And they're very protective about that. And that's why the laws in terms of lending to, businesses that aren't profitable or businesses that, that are focused, in the high growth space like fintech, haven't been able to access that capital. And that's going to be a challenge going forward. And there's more of a systemic change that needs to occur in Egypt and a mindset change, which could happen over the next couple of years, or it could take longer. So I think that's, where the main challenge is going to be for growth in these types of businesses.
And Saif, we're seeing a lot of countries. I mean, Dr. Tariq Hatem was actually asking a question about India and what's happening in many countries with really moving aggressively on the cashless, including even the governments changing the bank notes and pushing for people formalizing their businesses and so on. Do you see any of these things happening in Egypt? Do you see us moving towards cashless in an aggressive way in the short term, medium term?
Definitely. I've, basically been contacted by various entities that, want to encourage people that are launching businesses that reduce the amount of cash that's going around society. And I think the problem here is twofold, right? One is, converting the people that are not banked to become banked. So as Alain says, the underserved to become served. And then once they are served, to encourage them to use their cards as opposed to using their cash. These are the two factors that are going to determine how quickly we become a cashless society. There is a strong initiative by the government to push that forward because, like I said earlier, producing money is expensive, and it also hinders your ability, to price things. So, for example, a packet of crisps, right? You really have various price points that you have to go from, either or half a pound or a pound or, £1.50. You can't go to a pound and, 0.11, right? It's just very difficult. So, and that will obviously mean that the manufacturer will either have to bear, a loss if his costs are inflated that doesn't allow him to jump to a higher price point. So not only from a cash-based nature, are you going to be, required to see this change, but also from an economic perspective in the sense that it will give manufacturers of FMCGs a lot more flexibility in terms of their pricing and the ability to deal with inflation, which we've had a lot of over the last 10, 15 years.
I think this is very interesting. Any chance we can see the private equity industry looking at that space? I mean, globally, the valuations of fintech companies are becoming huge, and they're actually becoming substantial compared to the banking sector and financial services sector in general. So do you think at some point in time, we're going to see private equity funds or the like getting into that space, even in larger, more established firms?
For sure, and you saw it with Fawdy, right? This was an investment done that was back in 2015, and Fawdy was a pioneer in its space. The thing is, for private equity to be able to be involved, the company would have had to reach a specific stage of its development. And Shane, correct me if I'm wrong. In VC, you talk about a company pre-revenue, so the company still hasn't made any revenues, and that's one milestone. And then you have pre-profit, so before it's actually made profit, and then it eventually becomes profitable. I think private equity will be very challenged to look at something that is pre-profit unless it already has a very large customer base or revenue base, because it doesn't match our risk-return profile. But as the sector develops, and it is developing extremely well, as you can see with the amount of tech startups and investments that are happening from VC, investors all over the world into Egypt, you will get to a stage where these companies would have grown to enough of a size that private equity can step in and take it that final step of the way.
Wonderful. And as we get closer to the end, let me actually go in reverse order and Saif, let me ask you, any thoughts, advice, perspective for students or young entrepreneurs who are thinking about starting a company in the fintech space? Specific areas of opportunity, specific thoughts on how to get into that space? Any thoughts from your side?
Again, my favorite word of the session, scalability. Anything that you're going to do, just understand how scalable it is and how easy it is for you to achieve that scale. Because especially in tech business, that's the key word. How quickly can I go from 0 to 100? That needs to be the focus. And obviously regulation, if you're looking at fintech, unless you're focused on the services side, because obviously the services side is a lot less regulated than anything that requires lending or requires you to hold deposits. Because I think that's where regulation really, really steps in, is that if you're holding someone's money, the central bank needs to be able to control what you do with it. And that's probably the key differential between what we call mobile wallets and e-wallets. So the e-wallets are actually deposits made by individuals and depositors into banks, and there needs to be regulation there. So, back to your question, focus on scalability, and focus, in terms of the regulations and what is going to restrict me in terms of my growth, in terms of regulations.
Thank you, Saif. Shane, from your perspective, again, the same thoughts, advice perspective, especially you're investing in companies in Egypt, so you see the pipeline. So I'll ask in two questions, in two ways. One is, what kinds of startups in Egypt would be of interest for you? What do you look at when you look at startups? And what would you tell the aspiring entrepreneurs?
Yeah, so in Egypt, okay, I don't want to repeat so much the word scalability. Saif has repeated, but it is really key. I think especially in Egypt, because the way I look at Egypt is actually not so easy to penetrate. So if you can penetrate into the mass market in Egypt, no one doubts the market size of Egypt and also the potential of Egypt. So if you can touch a significant mass of let's say the population or the sectors, I really think your future is so bright. So figuring out that scalability, but also in a healthy unit economics with strong recurring revenue profile is very, very important. Because sometimes you can achieve that critical mass by burning so much money in marketing. And many VCs and investors actually do invest in those companies, but it's just not our style. We don't do that. We like to invest, because I also come from private equity background. Like we do love defensible unit economics with strong repeat customers. So if you can figure that out, do let us know. We'd love to invest in you and really before anyone else, and would also help build companies with you. Really, my last word of advice is, I really encourage all of us, like not only the students, all of us to study the models, not only from our region, but also globally, right? At the end, one of the reasons I get fascinated by investments is the way people think, the way people evolve actually tends to be quite similar globally. So like in the US, there's a lot of companies that have been formed in the last, frankly, 5 years in the fintech, and those will come very soon. And also we can look into the Asia, and it's not just a simple like a copycat. Because I actually do not like the word, because we're not giving enough respect for the local adaptation that we need to do. It's never easy for those international companies to just come. We need to come up with our own model that works here, especially in Egypt. But like if you are looking for how can I start, again, I suggest you go through the bank, literally study the bank, every single services they provide. I think it will give you good ideas, and also just have a broad view of international scene.
And Shane, before we close, actually, a question from Hussein Hamdi, and he's basically stating that banks are usually very rigid in SME lending. Are you seeing any specific disruptions on the SME? You talked about Khazna, that's
sure.
Consumer lending. What's happening on the SME lending in a minute?
So just to give you names, companies like Lendo, Rakimia, all these companies out of Saudi, they literally touch the SME lending. Liwa, Beehive. Like the SME lending, in my view, my humble view, is more exciting than the lending to individuals, because the SMEs, they have been deprived of this important access to capital for so long, right? And when the economy, especially the emerging economy, grows, SMEs play such an important role. So definitely there is massive disruption. It is the massive space. You don't have to worry about all other competitors, because the space is just so massive. If you can execute well, I'm sure you'll do well.
So we should be expecting companies that are providing working capital financing, including things like leasing, factoring, and working capital loans. And
absolutely.
That's fantastic.
Absolutely.
And I think that would have a huge positive economic growth implications. Alain, before asking you about your thoughts and any advice, there was a question about AUC Coin, and I know that you were involved in that. So basically the question from Yusuf, why is it not catching up? And if we cannot get cashless to work in AUC, which is a very digital community, can we get it to work in Egypt? What are you doing to get cashless to work in AUC? Yes.
Yeah. So in regards to AUC Coin, I mean, I couldn't agree more. There's definitely lots of cashing up that needs to take place, and I wouldn't really call the blame on the community itself in regards to why isn't it catching up or not. I think it all goes back to like the go-to-marketing strategy itself. I mean, the question relates to whether should we be marketing it better or more. Definitely yes. However, it's all about the tactics and how you do it. I mean, there were lots of experimentation when it comes to that. I mean, this in itself was an innovative solution that we and the administration actually work together on working on it and see how we can pivot and work from here to there and make sure that it works. And I would definitely like agree that maybe it started off on few wrong notes, but I guess accordingly it's improving along the way. Why? Because at first we thought like pretty much what all like community managers they think is like once we launch it everyone's gonna catch with it, but at the end of the day it needs to be like well put in terms of the steps and the adoption. And actually, surprisingly enough, we have to like mirror what we're doing on the open loop and on the nationwide scale, because at the end of the day, there's a phase of onboarding and there's a phase of activation. And activation depends on who you're talking with. You have to tackle it in a way or another differently. So this is exactly what we're focused on right now with the team over there. And I mean we have a dedicated team here at the company just for this, because it's a project that we really love and we have quite a personal like association with it one way or another. But yeah, moving on to the point where it comes to the advice, I think I couldn't agree more to what my co-panelists were mentioning. But the one thing I always like tell people wherever I meet, even my friends and my family and everyone, it's like surprising enough, and this is something I learned from our late mentor, honestly, it's like it all goes back to certain fundamentals that we all miss out on when we get too occupied with our day-to-day things. And that's whenever we get asked like what are the key success criteria to any company, it's always like you always see like this triangle of the business model, the idea, and then the team. I personally would say skip the first two and focus on the third one. I mean, having the right team in place, in my humble opinion, is like the best thing, and it's the most important thing that someone needs to have. And coming from experience when it comes to that, I think we believe that we had a great idea and maybe we had a great business model, but it just didn't work out. But what we know for a fact is that we had a great team that was able to adapt accordingly and move around accordingly when it comes to what the market needed, and how the market or how kind of like life took us in regards to which direction we should be moving. So accordingly, this is the one thing that is common out there. Anything else could change. And I mean, even when it comes to scalability, I've seen models that started off really not scalable, but then turned into something really scalable. And I've seen other models that started off like sounding really scalable, and then at some point you hit a certain like plateau level in which you can't scale it any further. But the one thing that is common across this and that is the team. And that team is the kind of team that can launch, and the kind of team that can scale, and the kind of team that can be up for the challenges that everyone will be constantly seeing, regardless of what you do and regardless of who you are. So this is something that I always tell people, like you really have to invest a lot in gathering up and making sure that the team around you and you are part of a team that really can take things to the next level.
Thank you, Alain. I don't think we could have said it better than that. I think this is fantastic. As we get closer to our closing, I wanted to thank our speakers, Shin, founding partner at Shorooq Partners, Seifallah Zoghbi, managing partner at Zoser Capital, and Alain Hajj, co-founder and CEO at Paymob. I think this was a very interesting conversation, and coming out of it, I think it's just, I cannot overemphasize that we are at a point of inflection in the payment and fintech space in Egypt and in the region, but specifically in Egypt. Lots of regulations, lots of regulatory reforms and changes that are happening right now. Lots of talent and lots of money getting into that space. So I think it's a very interesting, the next 2-3 years are going to be very exciting for that transformation in Egypt. So thank you everybody, and handing it back to Hala for conclusion. Thank you guys.
I would like to thank you, Dr. Ayman, for this lovely moderation and discussion. Actually, it was full of information and opened the space for lots of points to think about for all the participants, and actually to write about on the reflective papers. And I wish that everyone enjoyed the webinar today. I would like to thank you, Dr. Ayman. I'd like to thank our guest speakers, Seifallah, Zoghbi, Shin, and Alain, for their time devoted to this session. And thank you for all the participants. We'll be sharing the recording, and we'll see you on our third session coming up on October 27. It will be focused on e-commerce. I'll hope to see you all attending and learning more. Thank you so much, and I wish you a great evening. And Shane, yeah, it's time to go back to sleep, I believe.
It's 2:30 a.m. So
yeah,
thank you guys.
Thank you.
Bye-bye. Bye-bye.
Bye-bye.
Bye. Bye.
Bye.
Thank you. Bye. Bye.